Well, there continues to be a lot of turmoil in the stock market. And one of the questions that I'm getting a lot is what to do with the stocks that you own. Should you sell them? Should you look for bargains and buy them? Are they holds? I'm going to teach you some basic principles to answer that question. It's not complicated. You just have to understand some basic things. So that's what we'll do in this video. Then I'll analyze the markets and we'll figure out whether they are more likely to continue crashing lower or if we've found bottom and it's time to start buying those bargains. And then finally, we'll look at the trade of the week on PRTG. All right, so let's begin with just a little discussion around what's going on in the market and whether we should be thinking about exiting some of our positions. We have to assess each position and determine whether the stock is more likely to go higher or lower in the future. And this is what I'll show you how to do. If you like the company, let's say you think Nvidia is a great company, but you analyze and you say, well, it's actually more likely to go lower than higher, then sell it and buy it back at a lower price. Now, this assumes tax issues aren't part of the equation, because sometimes when you exit, there could be a tax effect, and you have to account for that as well. And you should always do your own analysis based on your own situation. So when we are assessing the stock, here are the key questions that we want to answer. First, who is in control of the market? Buyers or sellers? Now that's going to change based on the time frame, and I'll show you what I mean by that in just a moment. If the stock is oversold, that is a big effect. Well, how do you know if a stock is oversold? I'll show you that in a moment. Is the momentum starting to change? This is a very simple thing to determine. I'll show you that as well. There's no perfect answer. Realize that we can never be 100% correct in the market. We are just trying to trade the probability of things happening. So let's begin with a look at Tesla. Now I'm going to start with the 3-year weekly chart, and then we're going to go to a daily chart, then we're going to go to an intraday chart, because what you do depends on your time frame. If you are a long-term investor with Tesla, this is the chart that you should be looking at. If you're a short-term trader, we're going to look at a different chart. All right, I'm going to draw some lines on here first. So one of the rules we have in chart analysis is when a stock makes a gain, it shouldn't pull back more than half of that gain. If it does, as Tesla has, that means the chart is broken. So the Tesla chart is broken, which means in order for me to want to really buy it for the long term, I need to see it first build a rising bottom and then break up from a rising bottom. Because right now, the sellers are in control. Now that would be if I was a buyer. Let's say I own this stock. Let's say I've written it down and I wish I hadn't, but I still own it. The next question then is it more likely to go lower or higher? Well, it has very strong support right here. You can see that it had this, what we call an inflection point before it went up. We've fallen all the way to that inflection point. And this week, we have a green candle for the weekly bar, which means that the stock closed above its open for the week. So that's a pretty good sign that it's going to at least try to make a bounce back in the next few weeks. And therefore, if I own the stock, I would not be an eager seller unless we start to move down through this floor. That hasn't happened yet, so in the long term, it's a hold. Now, I'm going to now go to the 1-year daily chart. So I've just used Stockscores charts. I click on 1Y for 1 year daily, and these charts are free to use, so go to stockscores.com and use those there. When we want to see a reversal, what we're looking for is a break of this downward trend line from a rising bottom. Now we can see here that this low is not higher than this low. Therefore, we don't have a rising bottom. So even if we broke to the upside on Monday or Tuesday or sometime this week, we won't have done it from a rising bottom. And that means that there would be a relatively lower probability that it's going to go straight up. All right, we have to first build a rising bottom and then break up from a rising bottom. So again, if I'm looking for an opportunity to buy Tesla, I want to see that break from a rising bottom. Now we're going to look at one more chart of the same stock, but now we're going to look at it on an intraday time frame, 60-minute chart. This is where we can get sort of a micro view of how this chart is building. There's your downward trend line. There is your support. We saw that on those longer term time frames. And we're starting to build a little rising bottom on the hourly chart. So we have the makings for a break of this downward trend line from a rising bottom. So if I was a swing trader, meaning I'm looking to hold the stock for a few days, maybe a couple of weeks, we could get a buy signal on the hourly chart, maybe the 30-minute chart, And that would be just for the swing trader. For the longer term investor, it's going to take more time. Let's apply that same thinking now to the chart of Apple. So here is Apple, and this is where I want to emphasize this idea of overbought and oversold. So what I've done is I've drawn a trend line from starting at the high and cutting across the next lower inflection point, the little peak on the way down. And you can see that price, the current market price, is quite far below the trend line. In fact, at the start of the week, early in the week, we were way below the trend line. So anytime you are far below a trend line, a downward trend line, you are oversold. That means Apple has been sold off with a little bit of irrational, emotional selling. Now that doesn't mean it will bounce back, but it does mean it's more likely to bounce back than go lower. We also have support right here. This is a floor price that the stock has bounced off of a number of times, and it bounced off of it again early this week. So the signal based on the weekly chart is the market's weak. It's in the control of the sellers because we have falling tops, but it's oversold, and so it's likely to make a little bit of a bounce back. Now, how do we figure out if it is making a bounce back? Well, you guessed it. We're going to go to the shorter term time frame. Let's go to the 1 year daily chart first. There we can see that we're not really building any rising bottoms yet. We're still below this trend line. Let's dive in to the even shorter term time frame, the 1 month, 60 minute. Now we can see we broke this steep downward trend line from a low. We are now building a rising bottom with some resistance at this price peak right here. And so in the very short term, if we can just go sideways here under $200 a share and then break to the upside from a rising bottom, then we should start to move back to that downward trend line, which isn't a huge amount of upside, maybe to 215, 220. That would be for the swing trader, the very short-term trader. But that'll also start the process of healing this longer-term chart. It'll start the process of building a rising bottom for the longer-term holder, or at least aspirational holder for Apple. All right, the last one we're going to look at is Nvidia. It has a little different chart again. If we go to the 1 year daily chart, I can draw my trend line and I see that I'm not really as oversold. I'm not as far below the trend line as I was. Earlier in the week, this past week, we were quite far below, and that's why the stock was able to bounce back, because rational buyers who look at how much it sold off say, it's probably gone down too much. It had a floor price right here, which was this inflection point, and look at how it held that. It was slightly below early in the week, and then it came back to rally up. The problem now is that it doesn't have a lot of upside until it hits this downward trend line, depending on how I draw it. If I draw it like this, you maybe got $4 to $5 of upside until it hits that resistance. Let's go to the short-term chart, the 1 month, 60 minute. You can see that it already broke the downward trend line from a rising bottom. It did that early on Wednesday. And that was a signal for the swing trader to take a position. Where's it going to go? Maybe to the 118 to 120. There's some resistance there. So the principles are, first of all, determine who's in control of the market, buyers or sellers. How do you determine that? Are there rising bottoms on the chart, or are there falling tops on the chart? Now remember, the answer depends a lot on the time frame of chart that you're looking at. If you're looking at a weekly chart, you're going to get a very different message than if you're looking at an hourly chart or a 30-minute chart. So apply that analysis to the chart that represents the time frame you like to trade. If you like to do buy and hold long-term trading, then you're looking at the weekly chart. And if on the weekly chart, there's really no reason to buy Apple, Nvidia, or Tesla, or most stocks right now, because they haven't yet broken up from a rising bottom on the weekly time frame. But if you're a short-term trader, we have seen some buy signals on some of those short-term time frames. Break of a downward trend line on the hourly chart from a rising bottom. The swing trader who's maybe going to hold for a few days, on Nvidia, for example, buying on whatever it was Wednesday, has already started to make a decent little trade on that. Now, swing trading takes more time. Day trading takes even more time. You got to sit in front of your screen more. If you don't want to put in a lot of time, then you should be focused on the daily chart or the weekly chart. But apply these principles. Who's in control? Is the stock overbought or oversold? And that's all relative to where the trend line is. Is the stock building optimism or is it building pessimism, falling tops, rising bottoms? All of these things, where's support, where's resistance? If you understand those concepts, you can read any chart in seconds, and I've got more lessons on the Stockscores YouTube channel about that, so make sure you check that out. Now, before we get into the market analysis, just one more reminder. If you go to the homepage of Stockscores.com, scroll down, you can see here this free weekly Stockscores membership. It's free. I send out an email every Monday with trading tips, with lessons, and it's a good place to get started learning how I approach the markets. All right, let's get into our analysis for the week then, and we're going to go back to the Stockscores website, and we're going to pull up the S&P 500 chart. And on the weekly time frame, it looks pretty bad because we've had this big sell-off, and the scores are pretty weak. So you'd probably think, oh, he's going to say it's bearish. Actually, I think there's a very good chance we're going to see the market bounce back this week, and here's why. We have this long-term upward trend line. It has been hit numerous times. We were pretty overbought because we were far above the trend line. We've fallen all the way down to it, and we bounced off of it this week. Now, it may make a little pullback first and start to build that rising bottom. That's why I've got a neutral rating on it. I think the downside isn't below this line in the short term. Could be longer term, but for now, I like how it's starting to build some support. Now, in the short term, we're still pretty bearish. We're still in that downward trend line. We are building the rising bottom, so that's positive, but we need to break this downward trend line before we get too optimistic. Let's take a look at the NASDAQ. QQQ is the symbol. And here you'll see that its long-term upward trend line has actually been broken. That's the long-term upward trend line on the NASDAQ. And yes, we've held some support, and it probably is going to bounce back a little bit too, but I'm not quite as optimistic about the NASDAQ as I am about the broader market. Let's take a look at the small cap market, IWM. Here we can see we are quite oversold because there's my trend line. We are far below it. And so the small cap stocks should make more of a bounce back, especially since they've fallen into this trading range where it's going to be some decent support. So to know when we get the bounce, we're going to go to the 1 month, 60-minute chart. And just as we talked about on individual stocks, we can do this on the market as well. We need to break this downward trend line from a rising bottom. We're starting to build that rising bottom. In fact, this is sort of a head and shoulders bottoming pattern. If we can start to move up through this neckline, maybe we'll see the small cap stocks bounce back. Let's move our attention to the Canadian market, which is much more commodity based, and it too broke its upward trend line and maybe a little oversold because there is the downward trend line and we're some distance away below that, but it's kind of negative looking. If we look at the 1 month short-term chart, we do see very oversold, but starting to test this resistance from a rising bottom. Hopefully we can break to the upside from that. Let's take a look at gold, which is really the dominant sector in the market, and it is still very bullish, but it's going parabolic. So when a trend goes from linear, which is a straight line, to a parabolic curve, it really means that the buyers are getting a little emotional and chasing price higher. In fact, we can do the inverse of our other rule, which said a stock is oversold when it's far below the trend line. Now we can say that this stock, or this market, gold market, is actually overbought because it's far above the trend line. So there's no reason to sell gold, but it is likely to pull back soon. Here's your short-term chart. If we start to break this very steep short-term intraday time frame, I would expect that we're going to see some profit taking in gold. Hasn't made the breakdown yet, so if you're in gold, you don't have to sell, but that could change early on Monday if we start to break that upward trend line. All right, let's take a look at oil. With recession concerns, oil really got beat up for a couple of weeks. It's fallen into this support zone, so you can see it's held that zone numerous times in the last 2 years. And it went below during the week, but it closed basically at support. So it's fighting to hold that support. If we look at the 1 month time frame, you can see that much like many of those stock markets, it's starting to build a rising bottom. We just need it to break the downward trend line from that rising bottom and have it bounce back. I think there could be an opportunity to be a swing trade buyer of oil this week. Just watch for the signals. All right, let's move our attention to the US dollar, which has been beat up pretty substantially. This is the weekly chart. and you can see a lot of selling pressure in the US dollar. It's oversold also, and if we go to the 1 month 60-minute chart, you can see that we are way below the trend line. There's your trend line. You're way below it. So we should bounce back on the US dollar, but there's no real strong sign of that yet. We'll have to see if that starts to shape up. For now, it's fairly bearish. All right, let's take a look at Bitcoin, GBTC. This is an interesting chart because in the long term, it's in a bull market. We've got nice long-term rising bottoms. So if you are a long-term holder of Bitcoin, it remains bullish because the long-term time frame, the weekly time frame, is moving up with rising bottoms. But when you go to the short-term chart, what do you see? Who's in control? Sellers are in control. We have falling tops. We're starting to get a little rising bottom building, and we could break this cycle to the upside. That would be a positive and sort of break the short-term pessimism on Bitcoin. But hasn't happened yet. Could happen early next week. Final chart is a very important chart for the market. That's the bond market. And we had some weakness this week in the bond market, which means interest rates in the bond market rose this week. If we look at the short-term time frame, this is an important chart because it really affects stocks. Higher interest rates affect stocks, and the market is basically saying interest rates may remain elevated. If we start to build a rising bottom and switch the momentum, because right now the sellers are in control, if we start to build rising bottoms, then we can maybe see some support, particularly for those small cap markets, which are very interest rate sensitive. So my ratings then, bearish in the short term on US large cap, so that's the S&P and Dow, neutral long term. NASDAQ still going with bearish on both time frames. US small cap stocks, neutral in the long term because it is at support, should bounce back, but it's still in a bearish trend. Canadian stocks like the NASDAQ, bearish on both time frames. Gold remains bullish, but I think risky. Oil, long-term neutral, short-term bearish. The same for the US dollar. Bitcoin, long-term, sorry, I've got those backwards. It should, yeah, long-term bullish, that is correct. Long-term bullish, short-term bearish. And bonds, short-term bearish, but neutral because we are still stuck in that sideways range. All right, now it's time for the trade of the week. And what I'll tell you is, even though the market has had a lot of turmoil, every single day there are stocks that are making big, big gains. I call these alpha stocks. And in my active live service at Stockscores, we are always looking for alpha stocks. And here's one from Friday. This is PRTG. And the characteristic here is that it was trading with very abnormal volume. Now this is a day trade, and so we look at that volume. This is a 1 minute chart, very abnormal. That told us that the buyers had found a reason to be excited about this stock, even though generally they're nervous about the overall market. Well, we look for these action candles. That's that little pink and yellow dot there, and I love it when it comes from low volatility, which is sideways trading. So that was our entry point on PRTG, just a little after 11 in the morning on market time on Friday, I think 11:06, and it went for a nice run. Now you'll notice that I've got these lines drawn here. These are what I call risk-reward lines, and I use them for my exit method. And so this particular stock closed above its fifth risk-reward line, and so we move our stop up to the fourth risk-reward line for an exit right there. So the buy point was here, the exit point was here. It earned 4 times risk. So if your risk is $1,000, then your actual profit is $4,000. If you're risking $100 on the trade, then your profit is $400. And if you want to learn more about those sorts of things, make sure you watch some of the videos on the Stockscores YouTube channel, and make sure you're subscribed to the channel so you get alerts when I upload new videos. There's all kinds of free content on the Stockscores YouTube channel. Plus, if you've enjoyed this video, I'd appreciate if you click on the like button, subscribe as always, and most importantly, trade well.